Hello guys, welcome back with me. Don't forget to like, comment, share, and subscribe. Oil prices edge lower on prospect of rising United States interest rates. Singapore returns oil prices inch lower on Wednesday on concerns of another United States Federal Reserve interest rate hike next week after consumer prices unexpectedly rose in August, outweighing support from a robust OPEC oil demand growth forecast. Brent crude futures fell 38 cents or 0.4% a barrel by 0407 GMT. United States West Texas Intermediate crude was at 87.02 a barrel, down 29 cents or 0.3%. Pressuring prices was a hotter than expected United States inflation report on Thursday that shared hopes that the Fed could scale back its rate policy tightening in the coming months. Fed officials are set to meet next Thursday and Wednesday, with inflation remaining way above the United States Central Bank's 2% target. A strong United States dollar and unexpected for another super-sized rate hike by the Fed weighed on sentiment, said Tina Tang, an analyst at CMC Markets. The dollar climbed close to a 24-year peak against the yen on Wednesday. Oil is generally priced in United States dollar, so a stronger greenback makes the commodity more expensive to holders of other currencies. In China, soft ongoing COVID-19 curbs are squeezing fuel demand at the world's largest oil importer. China's zero-COVID policy remains intact, and that will keep any rebounds that emerge over the coming weeks said Edward Moya, a senior market analyst at Oanda, in a note. The United States is a big wheelchair, and if that demand outlook weakens, oil could resume its downward trajectory that has been in place since the start of the summer. On the supply side, United States crude stocks rose by about 6 million barrels for the week and September 9, according to market sources citing American Petroleum Institute figures on Wednesday. The United States government will release inventory data at 10 to 30 a.m. EDT or 15.30 GMT on Wednesday, lending some support to oil prices. The Organization of the Petroleum Exporting Countries, or OPEC, on Tuesday reiterated forecasts for growth in global oil demand in 2022 and 2023, citing gains since that major economies were faring better than expected despite headwinds such as surging inflation. Oil demand will increase by 3.1 million barrels per day, or BPD, in 2022 and by 2.7 million BPD in 2023, OPEC said in monthly report, leaving its forecast unchanged for last month. Oil dips nearly 1%, reversing gains after bearish United States economic data. Houston returns oil prices and nearly 1% lower on Thursday, reversing earlier gains as United States consumer prices unexpectedly rose in August, giving cover for the United States Federal Reserve to deliver another hefty interest rate increase next week. Brent crude for November delivery settled 83 cents lower at 93.70 barrel, with a 0.9% loss after trading between 95.53 and 91.05. United States October crude futures closed down 47 cents or 0.5% at 87.31 after touching a height of 89.31 and low of 85.06. The Consumer Price Index gains 0.1% last month after being unchanged in July. The United States Labor Department said economists polled by Reuters had forecast a 0.1% in fall. I think that's all from me. Don't forget to like, comment, share, and subscribe.